Okay. All right, 12 o'clock, and we're back. We have over 250 people signed up today, so we're going to give a few minutes to let people sign on. We're back. It's been a while since we've been on. I haven't lost any weight, but I'm trying, so I'm still COVID plus 19. We have some changes that occurred. PPP changes actually occurred yesterday and this morning. That'll impact some of the loan forgiveness. So what we're going to try to do today is update a few of the changes that were made and talk about certain issues about forgiveness, specifically forgiveness, and how to get this loan totally forgiven and what the three options are. We're going to talk about timing today. We're also going to have a little discussion on the tax impact of the PPP forgiveness and some of the SBA grant money. We're going to talk about the taxation, the potential taxation on that money. A lot of things that we spoke about in our last webinar have not been addressed because Congress spent most of their time back in their districts now working on re-elections and elections. They do go back to work on November 9th, which is Monday. So we're hoping that stimulus and PPP are at the forefront of their work. So give it a couple minutes and then we'll jump in.
You show them. That would be great.
It was funny when he got from that outdoor furniture place.
Yeah.
I never remember.
Yeah. Maybe one day we'll hold it alive someday for everyone. One day. Someday.
Once they forgive all the loans.
I think there's probably more than that. So just maybe one more minute and then we'll get started. If questions do come up, use the Q&A. Try not to use the chat. We might miss those, but we are going to try to go through this quickly so we can get most of the questions answered. We're going to speak hopefully for about 30 minutes, and we'll stay on as long as we can to answer all of your questions at the end.
All right, let's get started. So good afternoon, everybody. This has been somewhat of a boring week. I guess nothing's happened this week that impacts anybody. But joking aside, my name is Bob Simpson. I'm the managing partner of Brinker Simpson & Company. We are a regional Philadelphia CPA firm. And we have a business client base here of companies that are anywhere from pre-revenue to 150 million. Our sweet spot here, I'll say, is companies that are in the 5 million to 50 million revenue range. No public companies here, all traditionally grown. We have some generational companies here, all family businesses, and that's what we specialize in. Kristen McCabe, manager at the firm, is with me today, and Kristen took the lead on the PPP and the COVID response team when that occurred back in March. So a lot's changed in the last 6 months, and there's still a lot to change. Just go back to the disclaimer. I'll just put the disclaimer up there that we are not giving advice during this talk today, although we probably will. We do recommend that you talk to your advisors. Please talk to your tax advisors and your bankers and anybody else who's involved in helping you with this PPP process. Today's agenda will cover a few of these issues here. We're going to try to speak for a short period of time so that we can get all the questions answered. You want to put the questions in the Q&A, correct?
Correct.
Yeah, so the Q&A part of your Zoom, please put your questions in there, and we're going to wait to accumulate them, and hopefully we're able to answer them as we go through our talk. So we'll cover the history, We're going to cover the forgiveness of what we know already. There's a lot of congressional action that's pending. Congress goes back to work on Monday the 9th. There's tax impact to everything that's happening here, and then we'll get to the Q&A. Here's a slide just talks about what happened in March of 2020. You all remember the PPP program came out in March 27th, and believe it or not, by April 6th, loans were being funded. It's an amazing turnaround for really 1 week, one business week. This program got signed into law and banks were funding companies. So a pretty amazing program from the outset. Can you recall in the beginning, it said you had 8 weeks to do certain things. Take this money, spend 75% of it on payroll and related costs, and the other 25% could be spent on things like rent, mortgage interest, utility costs, and transportation costs. There was a lot of pressure on Congress to relax the rules. A lot of pressure on the SBA and the Treasury Department to relax the rules some, because what people were finding out, they were not able to get forgiveness for this loan, and this is a forgivable loan. That's why it's so attractive. People were not able to get full forgiveness in that 8-week period. So a lot of industry groups put pressure on Congress to relax the rules some, and they did. They reacted again very quickly in June or in May, I think, and came out with the Flexibility Act. That was put into law on June the 5th. And what the flexibility essentially said was, instead of 75% on payroll, you can spend 60% on payroll. And instead of an 8-week period, we'll give you a 24-week period to spend that money to get it forgiven. So they tripled the time frame and they reduced the emphasis on payroll. And then in October, it came out with a little change to the Forgiveness Act that really simply said that any loans that are $50,000 or below would be forgiven automatically with a short affidavit and some documentation to support the loan. So those are the 3 pieces that we're gonna discuss today. We're not going to go into applications for loans, and we're not going to talk about those items too much because they're old, they're redundant, and anybody on this call already has their money. We will talk about what we've heard from the banks and what we've heard from our industry specialists with Congress about what's going to come down the line. We're very disappointed, I'd say, as American business owners and American taxpayers that Congress did not act before the election to answer some of these questions. But now they have to get back to work and hopefully work on a second program. So there is another program that's pending, and we'll talk about that program today as well. It's a very specialized program. It's not going to impact everybody on this call, but it will if your business was economically impacted during a short period of time. You will qualify for more PPP, forgivable loan money, under the new plan that's being proposed. That's the one that everybody's fighting about. So Democrats in the House wanted a $3 trillion plan, and the Senate wanted a $1 trillion plan, and it came to $2 trillion. They throw trillions around like they're toys. But no agreement's been reached yet. But in that plan that you're reading about is another PPP program to hit businesses that were impacted directly. So we're going to go through that. The timeline and application. So this is what we know so far. Now we'll stay on this. The 24-week period, which is going to be adopted by most people. If you got your loan before June 5th, you have an option. You can either do the 8-week period or you can opt for the 24-week period. If you got your loan after June 5th, you're in the 24-week forgiveness period. The application for forgiveness has to go in within 10 months at the end of your 24-week period. So if your period ends on December 31st, you have to have that application in by the end of October of 2021. So you've got a long time frame. Some banks are telling their customers now that you have to get your your forgiveness application in. That's their preference. That's not yours. You'll find out as we go through this that we're still recommending to sit tight for a while to make sure all the legislation that passes, that's going to pass, gets passed before we do this application. There is no rush to get this loan forgiven. The 24-week period, will end from the date that you received your funds, 24 weeks after that date, or it will be at the end of December. The loan process ends at the end of December if you're still within the 24-week period. Some other changes that came down that we're going to explain today are difference in owner's compensation limits, self-rental expenses, that's changed. It's been enhanced a little bit. FTE calculations and safe harbors. We're going to clarify the EIDL grant program. We're going to talk about transportation owners comp and covered periods. That's what we're going to cover, and we're going to cover it quickly. We will send the slides to everybody, and we'll make them available on our website so that you can get all the information out of this. But let's move on to applying for forgiveness.
Calculations will be spelled right on the
Okay,
website.
we will spell all of our words right. So we did state that the application has to go in 10 months after the point that you receive your funds. There are 3 applications that stand right now. There may be more. So the first application was a form called 3508. It's an SBA form 3508, which your banks have probably sent to you at this point. That form's changed. So if you have an old one, you're going to wait for a new one. You also have a form 3508EZ, stands for EZ, I guess. So that form came out, and there's some criteria for being able to file that form. So we've listed the 3 criteria on this sheet here. If you are a self-employed independent contractor with no employees, if you did not reduce your headcount and you did not reduce your employees' payroll by more than 25% during the covered quarter, and you didn't do that, and your business was what suffered because of, we'll call it state legislation, closed your business. So if you're a restaurant, hairdresser, gym, whatever other business was closed by statute, you can qualify for this 3508EZ calculation. You still have to support your forgiveness with all of the paperwork that the bank is going to require and the SBA is going to require to support your numbers. So we've sent that out earlier in our webinars, but you need to support your payroll numbers. You need to support your headcount. You're going to need to support your utility costs, your rent expenses with invoices, checks. If you use an outsourced payroll company, that payroll company has a package for you that they will send you that will support your PPP forgiveness. I found out the other day that some payroll companies are charging for that report. It's a nominal fee. I would pay the fee if you need it. If you need the report, pay the fee and get the report from the payroll company. I'm not going to bash payroll companies, but if you remember when this all got started, the payroll companies all came out with their own computation on how you were going to, on how much money you could borrow, and they were all wrong in the beginning. So hopefully when we get to the forgiveness, they won't be wrong, they'll be right. So I would do that. That's for the 3508EZ form. There's no loan cap on that. So if you're at $2 million and you want to file a 3508EZ, you can. The third form that just came out in October is the 3508S. And what that says is that any loans that are under 50,000 can use this 3508S form. It's still a streamlined form. There is an attestation in there that you did spend the money in all the right places and you did all the right things. So like any loan document, the attorneys in the room, make sure that if you sign an attestation that you did do that you in fact did do that. Because if not, you have filed a false loan application, and I don't know what the consequences are, but they can't be good. If you have a loan that's over $2 million, and I don't know that anybody on this call does, but if you have a loan that's over $2 million, you need to file, the SBA come out a while ago and said, we're going to audit all loans that are over $2 million. There's a lot of loans over $2 million. Now they came out this week and they said that they have there's another form that's going to go in. It's an attestation form that you have to prove that you had economic uncertainties at the time of the application. And you're going to have to prove them with documentation that shows that you were entitled to that $2 million loan. Now, economic uncertainties doesn't mean that it's an economic shortfall or that it's an economic downturn. It means that there were economic uncertainties at the time of the application. This is new this week. We just got this yesterday. So if you're at $2 million or more, be in touch with your banker and be in touch with your CPAs to make sure that you're going to file this attestation form. Anybody who doesn't meet the criteria here for 3508EZ or S has to file the regular 3508 form. So in essence is if you reduced your head count and you haven't restored it, or you reduced your salaries for certain people below 25% and you haven't restored them, you're going to have to use the 3508 form with all the documentation attached. All of those forms are available through the SBA, and they should be coming to you if they haven't yet by your banks. That's it for this one. Let's move on.
It's just the forms.
Okay, this is a summary of the forms and the worksheets that come with those forms. When you get that, I can tell you that through our company, we have engaged some of our webinar participants to assist them with the forms. We have completed a few of the applications. We have not submitted any applications yet. And our recommendation is going to be repeated a few times today that we are not submitting applications for forgiveness yet, and we are recommending that you please sit back. If you are a sole proprietor and you got the $20,833 maximum loan and you made your $100,000 that qualified for the loan, you can submit your forgiveness and you'll be forgiven. There isn't any computation that really has to go in with that. But if you're at any complexity whatsoever, I'm recommending, or we're recommending as a firm, that you wait until we have all of the legislation that's going to come down on this. And it is going to change in these next 2 months. So wait until that legislation comes down before you submit your forgiveness.
This is just extra information on 3508.
Yeah, so what happens with this $50,000 loan? This is some information if you're at that level. SBA says that I think 84% of the loans that were granted are below 50,000. So this should remove a lot of the headaches for the banks once the forgiveness applications come in. If you have questions on these loans, you can contact us or reach out in the Q&A.
The one issue is the last bullet. There's an attestation in there that you've submitted documents to the lender to prove certain things, and it's very ambiguous. So I think the lenders are going to have to guide what they need from that. So I had one that was just 2 K1s, and I gave them the K1s for 2019 and did the calculation for the eligible compensation. But lender, that's going to vary by lender for what they need, and that's unfortunate that they put that in there. Otherwise, it would be really simple.
All right, now we're going to go to the compensation models for owners, which changes for any entity type that you're in. So this is a screen that we're not going to go through it all, but essentially, if you're a Schedule C filer and you've got your loan after June 5th and you're electing the 24-week period, your compensation that can be forgiven is limited to the $20,833. If you're a C Corp owner of more than 5% of the shares, your compensation is limited as well for forgiveness. For the 8-week period, it's $15,385. For the 24-week period, you're at $20,833. When you did your loan applications, hopefully you limited your compensation to those numbers and you did the application correctly. If you did, then you'll get 100% forgiveness when you go back on the application to forgive. C Corp owners are allowed to include their retirement expense and their health insurance expense as part of their payroll costs. S Corp owners and sole proprietors and partners cannot include those costs in their forgiveness application. So depending on what entity you're in, you want to make sure that that you're following the right compensation rules for forgiveness, just for the owners. That's all we're talking about.
I don't think a lot of people realize that. People have given us their information and assumed they were getting the highest amount. If you had a loss last year or you took 179 and reduced your self-employment earnings, you may not be eligible for any owner compensation. So just you have to make sure the calculation is correct.
Yep, be very careful on that. Here's a clarification from our last webinar, and it's called self-rentals. So some of our clients own the building that their business is housed in. If you rent to your company, first I'll talk about the sublet. If you sublet, if you pay rent, whether it's related or not, or you pay rent but you sublet and you collect the sublet rent, your rent forgiveness is only the amount of money that you're out of pocket for rent, so you have to reduce the sublet income. If you are a common owner, so you, the individual, owns the building that leases it back to your corporation, the rent that is forgivable is only the amount of interest that you're paying on the mortgage on that building. So your rent could be high in order to get money out of your corporation to yourself, but the forgiveness amount is limited to the interest that you paid during the covered 24-week period on that building. So be very careful. That's a clarification from what came out prior to October. The other item is if you hold the mortgage on the building and you rent that building to your corporation, the interest that's paid to you does not qualify for forgiveness. So if you're the mortgage holder and you're the lessor, the amount of rent will not be allowed for forgiveness application. Again, these are clarifications that came in after October. You may have submitted your loan documentation based on the rent that you pay, but now you have some criteria that might pull that rent out of the forgiveness application. So be very careful if you're own the building that your business is in and is paying rent. What are we clarifying in the next page? The 24-week and the 8-week period, we've done that. The EIDL, so anybody who got an SBA EIDL grant up to $10,000, that amount is going to reduce your PPP forgiveness amount. So if you got a $10,000 EIDL grant and you got a $100,000 PPP loan, the maximum amount of forgiveness that you can get on the loan is $90,000. So you will owe the $10,000 back to your bank. Your bank is not happy with that because they don't want a bunch of $10,000 loans on their books. So the banks that I've spoken to are going to make requests to their borrowers to have that EIDL grant money paid back. So EIDL grants are taxable, but they are not forgivable, just so you're aware of that. If you have multiple EIDL grants for multiple companies, one of our clients has 7 entities and got $70,000 in EIDL grants, he is not happy that he has to now pay that $70,000 back. He will not be forgiven for that amount of money. Transportation was one of the items that is a forgivable expense in your application, and nobody really knew what transportation meant. So now we do. And transportation refers to utility fees assessed by state and local governments. That's it. It's not gasoline costs, it's not maintenance costs, it's not leases on trucks. It's only fees assessed by state and local governments. So be very careful if transportation is a big part of your forgiveness application. Hopefully it's not. Hopefully over the 24-week period, your payroll has been sustained to the point where you can get most of your forgiveness from payroll. Okay, so we'll just highlight a little bit on what average FTEs mean. So if you remember, you picked 2 periods. In 2019 to determine how many full-time equivalent employees you had. Full-time equivalent is 40 hours a week. Once you determine that number of full-time equivalents, it's the lesser of those 2 periods that are on the slide. Once you determine that, that's the number that you have to sustain during your forgiveness period based on 40 hours a week. You have an opportunity to restore a headcount by December 31st if you're low before your application goes in. So you can restore it at the end of the year to get back to your headcount before you put your forgiveness application in. The other is There's some FTE safe harbors too. So what if I wasn't able, what if people left voluntarily? I wasn't able to replace them. What if people were fired for cause? Those items all came out back in May as safe harbors. What happens in that case is that the employee that left voluntarily comes out of both equations. So if you had 40 employees from your FTE computation in 2019 and you lost one of those employees, they left voluntarily, you start with 39. That's the number you have to match. The same for people that left for cause. The only issue that you have is that people that you furloughed or laid off, you need to offer them their jobs back. You do that by letter. If you submit them a letter and they reject the job, you want to keep that written correspondence that shows that they rejected the job. If that's the case, then they come out of the first count and they come out of the second count as well. So just be very careful with your head count. There are a lot of ways to get around that so that you're not going to get dinged on the head count. The other is a reduction in salary, which is the most complicated computation that's in this whole PPP thing. And really what it says is that anybody who was not a $100,000 per year employee in 2019, if you reduce their payroll by more than 25% this year during your period, that excess reduction, so if you reduce the payroll by 30% over the first quarter amount for this year, so their payroll for the first quarter was $10,000, and then in the next quarter you pay them $7,000. You reduce their payroll by 30%. That extra $500 that's above the 25% is not forgiven. You have an opportunity by the end of the year to restore their payroll, so you do have chances to get back to that. But if you have reduced payroll for anybody who was an employee in that first quarter, you need to be careful with this computation on your forgiveness as well.
One important thing with the salary too is if you can apply in between 8 and 24 weeks for your covered period, and your FTE count will happen at the end of that covered period. The salary restoration has to go out the full 24 weeks. So you're going to, if you let people go during that covered period, you're probably going to experience some salary reductions. However, because when you applied with 2.5 months of payroll, and then we're taking it out 24 weeks, most of the applications we are seeing, the payroll expenses are exceeding the amount of the PPP loan. So you may have some salary reductions. You let somebody go, it didn't impact you for FTE because of the safe harbors, but the salary does give you a reduction. The excess of the payroll costs for taking it to 24 weeks will very likely wipe out those reductions. So on all of the ones I've looked at so far, that's been the case. And also the other expenses, the non-payroll expenses, you may not need them because the excess of the payroll costs over your PPP loan should be enough to get you very confidently to zero.
So if you have excess, when you compute your forgiveness based on payroll dollars, you can use that excess to make up for any shortness in headcount or any shortness in the 25% amount.
They cannot confirm that. I was anxious about that because you're going to have 24 weeks of payroll over the 2.5, and you're also getting $45,163 per employee instead of 15.
Right.
So there's a lot of room. A lot of a buffer, yeah.
So what we hope to know, that's next, what we hope to know. So we hope for some things in the legislation that will clarify forgiveness. There's a bill that sits in the Senate right now that has not been passed by the Senate, but has been passed by the House. That bill would forgive any loans, automatically forgive loans under 150. So right now loans under 50 are forgiven, but any loans under 150 are forgiven. That bill had, President Trump had said he would support that bill. So that bill would need to get to the president for signature, and then the $50,000 threshold becomes 150. And that's one of the reasons we're asking some of our people to wait to get that bill, because that's rounding third at this point. Hopefully the Senate can push it forward. There are some other bills that are out there. There's the EIDL Forgiveness Act. So the PPP loan EIDL grant thing could be forgiven. They could pass legislation so that you don't lose the forgiveness of that EIDL grant. The HR 8675 is a bill that is sitting there. Certain asset calculations would extend the forgiveness amount. It's for bankers. The Protection and Payback Protection Program, Protecting the Payback Protection Program of 2020. That amends the CARES Act to otherwise, it will add deductible expenses to the, that will be included for forgiveness if you need to get to that. And then there are various bills that are out there. One of them is, the most popular is called the PPP Improvement Act. And that is part of the trillions of dollars that are being thrown around as the next PPP would be the third PPP loan program. And that will allow companies that are under $15 million of revenue and under $5 million of profits with less than 300 employees to get more PPP money if their gross revenue has a reduction of 35% from April 1st to June 30th compared with the quarter before or the quarter comparable last year. So that's for companies that have been hurt and can demonstrate that they were hurt. If you recall, we did address this earlier webinars that said it was a 50% reduction in revenue. That 50% has now been changed to a 35% reduction. Those are the bills that are pending. The only bill that's in the Senate right now is the $150,000 bill. There are other bills out there. One bill that's been introduced would forgive all loans under $2 million automatically. We don't think that that's going to pass, but we certainly would like to see that. Okay, let's talk about the tax impact. And we've said this since the beginning, and we've got a lot of pushback and we've got a lot of arguments. Forgiven PPP loan money will reduce the amount of whatever expenses were used to forgive the PPP loan money are non-deductible for federal income tax purposes from a Treasury ruling. It has nothing to do with the CARES Act. So any expenses paid by non-taxable income are non-deductible. That rule still applies right now. So if you got a $500,000 PPP loan and you get that whole loan forgiven, your taxable income will increase by $500,000 for the tax year. Now, there's some issues with that. It's not income, it's not gross income, it's a reduction of expenses. So if you're using your expenses for certain tax credits, payroll, for instance, is used for R&D tax credits and it's used for certain incentive tax credits. Do you lose the R&D credits? Do you lose the tax incentive credits because your payroll is reduced? Those items have not been addressed by anybody yet. It will take an act of Congress to change this rule. It's not going to be an SBA guideline. It's not going to be a Treasury Department. It's got to be an act of Congress. A tax law has to be changed in order for this taxation of these benefits to be changed. This is very important. If you're in an organization where you can gain some influence with your congressmen or your senators, please, we implore you to write letters, get this started. When you couldn't forgive your loans in 8 weeks and you needed a longer period, there was a lot of pressure on legislators to change that. And they did, they changed it very quickly. So if we put enough pressure on the legislators now to change the taxation of the PPP loan, hopefully those changes will come through. President Trump does support the tax-free PPP loan. Now, hopefully, we'll see where it goes, but it is going to take a lot of work to get there. Let's talk about timing. So, what happens if the PPP gets forgiven? The expenses that were paid are 2020 expenses, so the income and the tax impact are going to be in 2020, regardless of when your loan is forgiven. The question is, what do we do? How do we file our tax returns? So first recommendation is extend, as long as you can until you have full clarity on whether this is taxable. If you're uncomfortable with the extension, we're recommending to our people who want to file their tax returns in March and April, assuming we don't have clarity yet on this topic, to pay the tax as if those expenses were non-deductible, so pay the higher tax. The government has come down and said, if you do not pay the tax and you have to go back and amend those returns and pay the tax later, They will not penalize you on the low tax payment, on the additional tax payment. They've said that. I don't see it in a statute anywhere, and I don't see it in law, but they have said that they will not penalize you. Interest will be charged, but no penalty. So some clients have said, I'll wait. I'll file the returns. I won't add back the expenses. I'm not going to pay the tax. I'm going to wait for the government to come back and make me do that. There will be no 1099-Cs issued to companies by the banks for the forgiveness of debt. That's been already decided. So our advice is to pay the tax. Of course, it's conservative advice for our clients, but we will talk to each one of our clients and explain to them that there are no penalties that are supposedly going to be charged if you have to go back and pay more tax. But at least, if your accountants at least know what the impact is going to be. State taxes are uncertain at this time. So if you're a Pennsylvania resident, you've got a 3% Pennsylvania income tax. If you're a Philadelphia resident, you've got a 6% Philadelphia tax. So there's a lot at stake. If you're a California resident, you're paying crazy taxes. In New York, you're paying crazy high taxes. So not only the federal tax impact, but the state impact as well. We put a little computation in here that shows you somebody that got a $352,000 PPP loan. If there is no adjustment to the forgiveness, his tax is $110. If the forgiveness has to be added back, his tax is $230. So $352,000 for this taxpayer at this level of income has $120,000 tax impact that he has to cover. Now remember, you spent the money on payroll. You've done all the things you were supposed to do. Your employees are paying tax on that payroll that they received, and now they want to come back and tax it again. So let's hope we can move that away.
The other thing is, if you push it to 2021, that QBI could go away.
Yes, be careful, because if there is a new president, he has proposed a tax plan that's going to severely change the income taxes for people over certain levels of income and business owners. So the tax impact, if you push it to the next year, could be a higher level. We'll see. We don't know who the president is yet. So, all right. So what are our bankers talking about? So some bankers have told us not to apply. Some bankers have told us to apply now. And all of our bankers have told us that they drank more this year than they drank over the last 4 years. And if you know bankers, that's a lot. So I'll just tell you from experience that a couple of our clients who submitted applications for forgiveness had the applications bounced by their bank. The bank approved the bank hired an outsourced group to come in and do the application approval. In each of those applications, the group came back and told the bank, we need more documentation. It's not complete. We can't approve this loan to get to the SBA. So the bank said, will you contact the customer? And it was an accounting firm in this. The accounting firm said, no, it's your customer. We're hired by you. We want you to go back and contact your customer and get the additional applications. And I know the entire application process for that bank fell apart at that point. So there's a lot of issues here. We're still recommending that you sit on it and wait. There's no need to get the application in today. So as of today, the SBA did issue us some new guidance. Here it is on the screen. There are SBA offices everywhere, so you can contact the SBA people. And there's also, in a conjunction with the SCORE group in each county, can help you through the PPP application. And as we said, we also have a little division here that's working with a lot of clients on their PPP applications. That came out today. What else we got to do? So
when we say delay, we mean submitting. I think it's really a good idea to start looking to see if you should do 8 or 24 weeks and finding out where you will fall in terms of forgiveness. Get as close to the end as you can so everything's covered. You have the documentation for everything, and you feel confident that you're close to zero that you owe the bank. And I think that's the right way to go, is to get as close to submit as possible and then hold off for a little bit.
Yeah, so we hope our next webinar will be announcing that the taxation has been removed. That's what we're hoping for. That's about the only improvement other than the $150,000 item. That's about the only change that we see coming down that could really impact the forgiveness process. So our recommendations right now on applying for forgiveness is to wait. We do recommend that you get your applications ready, get your documentation together and be ready to apply, but hold off. Taxation for our clients, we're recommending that we address it with each client, and you should also address that with your tax advisors and see what their recommendation is at this point. We're all hoping for more clarity at this point. So we're done talking, and we're going to go to questions that are in the Q&A. Uh-oh.
No.
Oh, no, I hope we weren't hard to hear the whole time. Yeah. Do you anticipate additional PPP for self-employed with no employees in the next round of CARES money? Also, do you anticipate PPP loans have already sent prior PPP funds? Yes. So if you meet the criteria in this new round, it's already been established what the criteria is. And if you're under 15 million and you're under 300 employees, you count, but you've got to have the economic hardship of having your revenue reduced by 35% in the quarter over the preceding quarter or over a comparable quarter. It doesn't matter if you're self-employed, a large company, it doesn't matter. As long as you hit those three criteria, you should be eligible for the new PPP money that's already in a congressional package. We don't know if it'll change. We hope it does. We hope it broadens it a little bit more and maybe relaxes that 35% number, but that's where it is right now. Other than owner's cap, do we have to cap anyone's payroll? Originally, it was $100,000 had to be capped. That has not changed. So anybody who makes over $100,000 is capped at that 100 for the computation. So it's either $15,385 if you're doing the 8-week forgiveness, or it's $45,000 something if you're doing the 24-week forgiveness for the $100,000 person. I have an employee who was called up for reserves after we filed for our loan. He will probably not be discharged until next year. Is there an accommodation for such a situation? I would say that there is an accommodation for that because that person is unable to return to work.
Plus it's under 50. The 3508S eliminates the reductions for those two reasons. You're fine, and you should be able to use the 3508S.
Yes, you should be able to use the 3508S since your loan is under 40,000. If you're under 50,000, if you're over 50 and you have this circumstance, I will almost guarantee that there will be some set off for that. Reference to the 40-hour week rule. Our admin payroll is based on 37.5 hours per week, but hourly and salary work 37.5. What do you use for a denominator, 40 or 37.5? The denominator is 40. Even if you have a 37.5 hour person now, that means to assume you have a 37.5 hour person back in the two measurement periods from 2019. If that's the case, then your numbers will be the same. You haven't changed anything, but you will use 40 hours for your computation going in and 40 hours for your forgiveness computation. How do you account for bonuses? Bonuses are included in payroll just as any other payroll amount is. For some time there was talk that bonuses would be excluded. But if the bonus puts you over the $100,000 mark, you're limited on the amount of payroll you can get forgiven. The $45,000, if you know it doesn't, your bonuses are fine, just regular payroll. Salary reduction. Please confirm if an hourly employee are based on their hourly rate or their average weekly pay. All rate.
Hourly rate. So if you reduce their hours but you keep the rate the same, you will not have a salary reduction.
Right. Based on rate. Can you send sample tax-free letter for us to send? We will. We'll put one on our website. So,
we'll send one.
So we have a website that addresses just the COVID and the PPP issues, and it's www.brinkersimpsoncares.com, and all of the updates are loaded to that daily. There's a lot of updates that come in that are state-driven. There's grant programs. They're all loaded onto that website, so that's a good one to check into every day to see if there's changes. But we'll load the letter up on the website too that we write, so you can use that as an example. So is it advised to apply for forgiveness before 2020 ends to avoid the Biden tax plan in 2021? No. The Biden tax plan, whatever that is for 2021, should not impact you because all of your expenses, if they're taxable and they're non-deductible for forgiveness, occur in 2020. So the tax impact will be based on the 2020 tax rules, not anything that changes going forward. Thank you, Hillary. I know you're in the office next to us too. The three criteria for the next loan program is gross sales under 15 million, net income under 5 million, employee count under 300, and a 35% reduction in your gross receipts during the quarterly period. Our part-time employees that work less than 40 hours before and after are covered, addressed. So part-time employees will be added together to get to 40 hours. And then, so if you add all your part-time employees together and they're 100 hours, that's 2.5 full-time equivalents. That's how you would measure them. If their hours are the same in the beginning if their hours are the same in 19 as they are in 20, you should be fine. You shouldn't have any reduction there. Does anyone else have trouble getting correct PPP loan reports from ADP?
Yes.
Yes.
Yes. I think it's still good to reference them. We may, just because they'll have the underlying information, and then if you can get it into Excel and make it correct, that's probably not the worst idea, but I did try to pull some for a client and they were not correct. So that's true.
Is there an option to return PPP loan in full? Yes, you can pay it back at any time. Now, if you have an unforgiven amount of loan, that loan can be paid back over 5 years at 1% interest. So it's a very affordable loan going forward, but you can pay it back at any time. There's no.
And there's some interest on it now.
Yeah, you're gonna owe some interest because you're probably outside of your 24-week period, but it's a 1% computation. You are an owner of multiple corps and you have payroll in each one. Can you apply forgiveness in all four? No, you're going to get bounced on that one. We have some clients that have tried that, and I don't think they're going to get the forgiveness through. But nothing ventured, nothing gained, I told them.
And hopefully with the 24 weeks, you won't need it.
Right.
If you have other employees.
Your owners are going to be limited to 20,833. Our fiscal year ended on 9/30/20. Now you're going to get into some problems here. We received our loan on 5/3. We're using the 24 weeks. Should we assume that should we assume we will reduce our payroll, et cetera, on that 9/30? So that's going to be tax advice. And I'm not going to give you the tax advice. I would ask you to go to your accountant. If we're your accountants, I am going to recommend as your accountant, you either reduce it and pay the tax now, or you wait and see what happens with legislation and then go back and amend that return, pay the tax, pay interest, but no penalty. That's going to be your choice.
We are doing 2 tax plans for every client that we can so that they at least can prepare for what they'll have to pay, but extend as long as you can. And it is unfortunate for fiscal year filers.
Does the company have to be headquartered in Delco in order for the grant? For Delco Strong grant? Yes.
Yes.
You have to be headquartered in Delco. I was turned down by Chase and Webster banks for the first time. I am self-employed at S Corp with withdrawal and no payroll. What are my choices for future PPP? You don't have any choices. You remember, PPP is a payroll protection program. You are covering the payroll that's been paid. If you were not taking payroll as an S Corp owner, you're not going to have a basis to get a PPP loan, even with the new loan coming out. Is there any more information on the Main Street Loan Program? Well, we didn't talk about it today, but the Main Street Loan Program
These changes came out this week. It's an
SBA, there were changes actually. It's an SBA program that's lending based on your EBITDA from 2019. They take a multiple of your EBITDA and that's the amount of loan that you qualify for. The only change that came out this week was the loan had originally been limited at $1 million, then it went to 250, and this week it came, the limitation on that loan, the low end limitation is 100,000. So you can borrow as little as 100,000 under that program. It is a low rate loan, but rates are low everywhere. It's a 5-year payback program, but you have a deferral for 2 years of the payback program. So it's a good loan for companies that were doing very well, and then they fell off a little bit, but can be restored over the next couple of years. And this is a bridge loan to get them to that point. So far across the country, 400 loans have been granted. None of my clients have even applied for this yet. So that's the only update I have for you, Drake.
Apparently on Friday too, it came out that loans under $2 million would not be held against you as outstanding debt for a Main Street application.
Yes. All right, next question. If my company charged rent from a separate LLC, which is owned by the principal of the company, is the rent amount limited? Yes, it's limited to the interest that LLC pays to the bank. That's the rent limitation. That is new, just so you're aware. I love the way they grant these things after the loans have been, but the rent is limited. Is that everything I need?
Yeah, that's it. He should be okay though, because with the payroll, with the
Yes.
$45,000 per employee,
He should be.
most people, if you have more than 5 or 6 employees, that when you get the extra payroll expenses, you may not need the non-payroll costs.
Hopefully.
Hopefully.
All right, we answered all the questions. We're good to go. We kept it within an hour, or yeah.
I think so. Yes. So,
Again, Brinker Simpson is the firm, and we have our website is www.brinkersimpsoncares.com. Please send any questions to, we have an email address called Brinker Simpson Cares. If you have any questions at all and you want to send them, we're answering them very quickly as they come in. So please, I think there's some things in the chat. Let me check the chat here since we got some time. All right, all the deadlines we went through. Multiple escorts we covered.
Oh, I should guess that was Monday. Can I get Kristen? I cannot hear you clearly. Can you get closer? You don't want me to get closer to the microphone.
Is there any safe harbor? We went through the safe harbor for employees that voluntarily take time off each year. An employee that's off in June. If the employee voluntarily leaves, they come out of the computation. So if it's their action, they come out of the computation.
But not for the salary part.
Are you talking about me, June to August? That sounds like me. All right, that's it. There's 2 in the Q&A. Did we cover them?
Nope.
Thank you, guys. PowerPoint slides. Yes, we're going to add the PowerPoint slides to our website, and you can email us, and we'll actually send them to you by email as well.
I can.
Hi, Kim. All right, anybody else that has questions, please send them to that email address, Brinker Simpson Cares, and we'll get back to you. So thanks again. Hopefully we get tax forgiveness going forward. That's what we're hoping for. And then maybe sometime this week we'll know who the president is. Thanks, everybody. Have a great afternoon and a great rest of the week.